Welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today I'm looking at a few cloud computing services stocks, not the big dogs that we know that actually are hosting cloud accounts, but companies that help your cloud applications power faster, better, all those things. So if you're big on cloud computing stocks, some of these companies might intrigue you because they power ancillary services that almost every company needs who's going to move to a cloud-based architecture. Disclaimer, as always, my stock picks and projections are my opinion only. Please seek the advice of a financial professional before taking on any of the risks in the stock market. However, if you do enjoy stock market analysis, investment ideas, and personal finance videos, then please subscribe to the 40 Finance channel. Thank you to the 5,000 or so subscribers who have already signed on. So as I mentioned in the preview, this isn't about the big cloud providers, okay? This is not about Amazon, Microsoft, Google, Alibaba, IBM. Those companies are going to be going on for years, acquiring new customers. And the way I see things going is just sort of like the fundamental cloud storage aspect or cloud computing aspect is probably going to live in those gigantic corporate players. But where the real opportunity lies now, and it's already starting to heat up, is the ancillary services that help companies make the most out of their AWS cloud accounts and Azure cloud accounts. That's where folks need a lot of help. I don't think selling the cloud as a whole is going to be very difficult for most companies going forward. It's just what do we do and how do we implement things once we're on there. All right, so the first investment opportunity related to the cloud that's not the cloud, if that makes any sense, is Digital Realty Trust. And at the end of the day, in order to truly have a cloud-based infrastructure where data centers are populated in different parts of the world, certainly within the country, then the companies who provide them have to actually fulfill these contracts, right? They have to have data centers in different places, and that's where Digital Realty Trust really has found their niche, and that is by owning and renting data center warehouse space so that they can help their partners fulfill the redundancy requirements in their contracts. Stock price today for Digital Realty Trust is $148.59, and this is basically a REIT stock, right? Because you're talking mostly about real estate, rentals, all those things. You got a 52-week range of 105 to 158. So the 148 as it stands today, you're inching closer to the 52-week high. P ratio of 53. And of course, the big call out for getting in any kind of REIT like this is the dividend. Currently sits at 3.02% as of today's stock price. All right, so let's take a look at the TipRanks dashboard to see what are the best performing analysts saying about Digital Realty Trust. And as you know, I'm a big fan of TipRanks. I have my affiliate link in the description where you can learn more about it and potentially support the channel. It's a great tool for investors who cover a lot of different stocks and want to get insights on what analysts are thinking, insider buying information, and it's just an additional way to analyze stocks not only in your portfolio, but ones you might be watching. On the DLR side for TipRanks, we have 6 buys and 5 holds. Median price target today of $152.30. Hey, that's only a 2% upside. These cloud stocks are not cheap right now, but what we're looking at is truly that long-term hold. So I think almost everything in this industry, you want to get in for 3 to 5 years, if not longer, because this industry is certainly not going away. And I think when you factor in the dividends, DLR makes a pretty nice investment that gets you away from the big tech data centers like Amazon and Google and puts you into another niche industry related to cloud computing. All right, next cloud service that we have going on is Akamai Technologies. And Akamai helps developers make sure that their applications are being delivered securely and quickly to all the different end user points. It's a very valuable service, and it's also sort of easy to tack on in a cloud atmosphere. So this is one, again, you're looking at sort of like a subscription-based service that developers use, that once you get all your cloud structure set up, your customers are going to be with you for a long time on a service like this. Stock price today of $113.12. We've got a 52-week range, $75 to $114. So like so many other cloud players, Akamai is at the top of its 52-week range. P ratio of 37.71. No dividend with this growth company. You do see the forward PE drops to 22.78. Trailing 12 months revenue, $2.95 billion. So this is not a small cap stock by any stretch of the imagination. You have cash on hand of $1.25 billion and a debt load of $2.6 billion, which I'd say is fair considering the money that they're bringing in and the cash on hand. On the tip rank side of things, we have 11 buys and 4 holds from the top ranked analysts. Median price target's only 115 from these analysts. We do have a high of 150 and a low of 94. So again, only a 1 or 2% growth expected over the next 12 months. But that's where you have to manage what the stock market's doing today. And I think we can all agree that the market's been pretty hot lately. So you're definitely buying at what appears anyhow to be the top of the market. Maybe wait for a dip on all these things across the cloud. We do have those Q3 earnings coming up here in July of 2020. So there could be little opportunities to add to the projected gains with a company like Akamai simply by waiting for the best entry point. All right, next stock on the board is VMware. Here's another company that helps you build and launch cloud-based applications and is sort of becoming one of those like must-have ancillary tools for a cloud-based infrastructure. Stock price today at $149.88. 52-week range on this one goes as high as 183, so there could be a little bit of room to run as they have not gotten back to some of the peaks that they saw back in July of 2019. P ratio today, one of the lowest on the board at 990. The forward PE, however, does jump to 25.38. So sometimes when you see that, you could be either declining sales or it could also be the cost of an acquisition recently made. Make sure to do your own research to check on that. Trailing 12 months revenue of $11 billion, cash on hand almost $6 billion, debt load of $8 billion, very similar financial footing except scaled up a notch like we saw in Akamai. All right, on the tip rank side of things for VMware, we have 11 buys, 6 holds, little bit higher upside here of 13%, median price target of 170. And I think what would be interesting as an investor is to look at why VMware hasn't reached the same all-time highs that everyone else is experiencing in the cloud. I didn't get that far in my research for this one, but I can tell you that it's widely regarded as a good company, so I would definitely dig in a little more if you're interested. This one seems to have more immediate upside than the others. All right, next stock on the board is CrowdStrike Holdings. And CrowdStrike is another one that's capitalizing on security for the cloud. And this is a really complicated problem. So while I've mentioned security as an offering for some of the other stocks on here, it really is a multi-pronged approach that you have to have with security. You sort of have like the internal security. Then you get into security like CrowdStrike does, which is more far-reaching. So if you have like Internet of Things applications, desktop applications, obviously mobile phone, then you have these virtual machines, right, that come out of your core database, and it bounces off virtual machines to deliver things in a much more efficient way. There's a lot of entry points for security problems, and that's what CrowdStrike is focused on addressing and helping their clients solve. Stock price today at $107, just barely off of its 52-week high of 108. No P ratio for this one right now or going forward, as the company is still growing. You see on that 52-week range, you had a low of $32. Today you're at 108, so you've missed a pretty substantial run-up. This one, it may not be the best entry point, but perhaps on a dip there might be some opportunity. The trailing 12-month revenue, though, on CrowdStrike, this is the smallest one, right? We only have $500 million over the last 12 months. They do have $1 billion on cash and hardly any debt. So I think what you have with CrowdStrike is a smaller company that's growing fast, and there's a lot of excitement there. You're going to have to figure out what is the best entry point as an investor to sort of get in low and capitalize on the next few years, where if they do grow as expected, you are able to see the gains as opposed to getting in at the current 52-week high or thereabouts and having the potential for dips if this market does take a slide. All right, on the tip rank side of things, we have 14 buys, 5 holds, median price target of 111.47. That's a 3.92% upside. So even the best performing analysts are calling for a little bit more upside in this one. I like the company, and there's a lot of excitement around it. That can also be scary, though, if everybody's sort of rooting for a company and they've invested in it thinking it can go to the moon. Maybe it can, but buying high for a company with $500 million revenue, that may not be the best choice. However, if you see some of these earnings reports and getting into August and September, when we see exactly what's going to happen with this virus, could be a lot of dips in the market where you could pick up a company like this and put it off to the side for the long future. All right, last stock on the board is Splunk, which is another high flyer in this cloud-based game. They offer data mining opportunities across cloud infrastructures. So not only the sort of typical data that you would think about, like sales reports, usage reports, stuff like that, but it's even deeper than that, because it gets into how your cloud infrastructure is performing, how developments that go into the cloud are working alongside others. So don't think of it as like a Google Analytics for websites or sales reports. What's really genius about this is they have developed sort of like this performance reporting for your cloud architecture, and they've carved out a nice niche there. Stock price today at $199.91. 52-week range on this one between $93 and $205, so about $5 off of its high. No P ratio this year. Looking ahead, you see a forward P has appeared on the map at 16.98. We'll see if that happens. Trailing 12 months revenue of $2.3 billion. You got a debt load of $2 billion, cash on hand of $1.76 billion. So plenty of room to run on this one if they got into acquisitions or needed to scale up. I think that the debt load is pretty manageable. On the tip rank side of things, we got 23 of the best performing analysts signaling a buy on this one. You got 4 holds. And through all those analysts, what's interesting is the median price target's $194.19. That's actually a little bit of downside, and that just goes to show you how high the stock has run up over the recent, call it 30 to 45 days. It's still a fundamentally exciting company going forward for long-term investors, but it's not going to be one for quick switcheroos or swing trades right now. The key for this one is you got to try to, again, get in a little bit lower, hold it for 3 to 5 years, and see where things end up. All right, so those are 5 cloud computing services stocks that sort of tack on to the big cloud players in the stock market that we already know: AWS, Alibaba, Google, Microsoft, IBM. Those are the core resource providers, right? Those are like the big pipeline providers. Now, all of those big providers are definitely going to see gains over the next 5 to 10 years. It's just such a big company, though, that it's going to be a slow and steady returns. Nothing wrong with that at all. What we're trying to do in this video was look for people who tack on after the fire hydrant, so to speak, on these pipelines and offer other services that work with the cloud and make your time on it as a business more efficient. So hope you guys enjoyed this video. Please give me a like and subscribe if you did. I will see you on the next video.